Okay, everyone, thank you, and welcome back for our very, very first keynote, where we're extraordinarily pleased to have Jeremy Kroll. You know, it's hard to be just the only person on stage getting questions, particularly in front of regulators and some investment advisors and compliance folks. But Jeremy's role and vision, particularly as it pertains to some of the cutting edge, not just opportunities, but also the risks facing fintech, is singular. It's unique. It's extremely interesting. He's a trusted advisor and a complex problem solver for both the business side and on the public side for business owners, boards of directors, C-suite executives, and he works with them to mitigate different areas of financial risk, technological risk across corporate and family office spheres. He advises, again, government clients, market clients, multinational firms relating to cross-border investments, and he helps them to navigate something that is becoming central, really, to the business operations of firms, and that is the cybersecurity landscape and how to navigate that landscape, again, with as few risks and troubles as possible. He's also, which is very, very active in the investment community. He is a CEO in the C-suite. He is an investor focusing on emerging growth and growth companies at the intersection of technology and security. He sits on lots of advisory boards. He's a Georgetown undergraduate, quite Saxa. And also, he's someone that I really wanted to come to talk to a legal audience about, again, technology, about compliance, about the 21st century threats facing our financial market infrastructure. And I wanted to get it from somebody who has the perspective of someone who understands compliance but is also active in technology, who's also active as a leader of a large multinational organization, and also someone who's active as an investor and who's looking at new generation companies and the kinds of opportunities that are popping up as other firms try to tackle and approach different cyber risks and opportunities facing the financial community. So I'm just absolutely thrilled and delighted to have Jeremy Kroll here over at the law school and at the Institute of International Economic Law. I think, as I did with the previous panelists, maybe if you could just talk a little bit about K2 Intelligence, talk a little bit about what your role is and what K2 Intelligence does to provide a framework for our conversation on cybersecurity and compliance, and then we'll just move forward with our subsequent questions.
Sure. Thank you, Chris. I should just drop the mic. If I had one, I would drop it, because if anything more that I say will be underwhelming. So very generous introduction. I am Jesuit educated. I was in the undergrad program at Georgetown, so I think it's appropriate for me to make a confession that I have sinned. I never would have been able to get into the Law Center, but today I hacked into the Law Center by being invited to come and speak to everybody. So I want to atone for my sins and thank you and the organization for having us here. It is an honor. It truly is. And it's the perfect intersection where not just the Law Center, but the organization that you run and the dialogues going on over the next few days, you're from our perspective, where we are as a firm, which is really the intersection between financial services, technology, legal and regulatory bodies, and players, and human beings grappling with, frankly, challenges of the same coin. We think one side is mine and the other side is yours. It's actually the same coin. We're on the same side. So as a firm, we have a legacy of over 45 years of being in the corporate investigations business. The original company, founded by Jules Kroll, my business partner and father, 1972. We built that to become a $1 billion revenue business, sold it to Marsh McLennan in 2004. But that business spawned out of a private investigative agency and focused on 4 areas of risk, and grew dramatically through the 90s and early thousands. And once we sold it in 2009, we were free to compete and go into the field again. We did 2 things. One was K2 intelligence, the other was something called Kroll bond ratings, which is a new expression of our expertise in risk management and how do you create a disruptor in the credit agency world, corporate credit, not consumer credit, which will probably be a topic we'll talk about in terms of cybersecurity. So we look at risk holistically. We look at it from a regulatory, from a legal, from a technical, from a practice standpoint. We look at it geographically. And when we started in 2010, effectively, K2 was focused on corporate investigations, regulatory compliance, so anti-financial crime, sanctions, things of that nature facing both foreign and domestic institutions, and cyber risk. If you've been at this for as long as we have, cyber is a new term, effectively. It's sort of old wine in new bottle, and information and networks have been vulnerable for many, many years, if not decades. But we're at a point now where the awareness level is at an all-time high. So what are we going to do about it? So as a firm, we really look at these different dimensions. And as you say, we work for family offices and individuals as well as institutions, both traditional financial institutions and fintech companies as well.
Great. So when you think about cyber risk, where are the greatest risks coming from? Yeah, I guess you can think about the question from a number of perspectives, both from a geographic perspective to a technological perspective. But when you think about cyber risk, where do you think are the highest points of concern?
Well, the targets, let's think about who the targets are, and it's everybody in this room. And I'm sorry if that feels like a scare tactic, but it's reality. Human beings are the targets, and whether it's a nation-state actor, it's an economic crime in process, it is a hacktivist, they're all going through a lot of the same disciplines to get at information about you and through you to develop a base of intelligence to then pivot off of to affect whatever their end goal is. So we are all the targets. I think as far as industries go, the financial services industry is and has been on the vanguard, both on the regulatory and legal fronts as well as the industry itself. It's a much more visceral sense of loss. And so what you're seeing now, the threat landscape is evolving, and where there's a tremendous amount of progress that's been made, I think, between industry and private sector, public sector, and financial services, among the large money center banks, the large regional players, some of the large insurers, there is a dramatically big gap between those that are in a great spot from a security perspective and those that are not. And so I think one of the things we do have to really focus on is closing that gap. But we're also looking at the threat evolving, and when we see more industries being affected through financial crime, through account takeovers, through ransomware attacks, now it's happening to the real estate and construction industries. It's happening to the legal industry, to law firms. It's happening to companies that you would think are more focused on security, but most of their lives they've focused on the physical side of security, not the digital information. So that's a data point that's interesting to us. It means that the bad guys are pivoting into other industries, which means financial services is frankly doing a better job. So they're going to softer targets.
And just by going to those softer targets, is it a way of circumventing and finding a way into the financial institutions through the back door, or is it just
great question? I mean, yeah. So if you're looking for money, yes, you follow the money and then you find the soft spots. So one of the really important concepts that's turned into regulation and best practices is a nice sort of friendly way of putting it, but is third-party risk. So that brought to the fore the public's understanding of third-party risk when Target was attacked through a third-party vendor, their HVAC vendor. So someone was able to compromise the payment systems of Target, and this is all public, obviously, but through the HVAC vendor. So third-party risk is a massive challenge. It is a way, if you want to follow the money and you want to get ultimately to a securities firm or to a bank, there are definitely ways of going through. One of the things I think we will maybe talk more about is insider trading. And so if you don't want to try to rob the bank, you just want to effectuate trades. In the old days, you would, 10 years ago, there was a story about people who got advanced copies of Business Week, and they traded on that information. Okay, so flash forward to a few years ago, you have more and more targeted spear phishing activity. So I will look after, the top law firms and the partners and the associates and the admin, and I will get into their inboxes and I will figure out what transactions are pending, and I will trade on that information. That was a few years ago. Flashing forward to the most recent revelation is that Edgar was compromised. So you go from, a sort of a small-time, small fraud, cottage industry to a more and more advanced effort and campaign to the point where machine learning and AI is taking over and helping the crooks get to information at scale and benefit from it.
That's really quite interesting. So from someone who's involved in investigations, who's involved in cyber hygiene and who works with, again, the public sector as well as the private sector, I mean, what were your initial thoughts when you saw the Edgar hack? I mean, were you surprised, and did you note, or were you able to immediately guess sort of what kinds of vulnerabilities were probably in place for that to happen?
Not surprised, not because I knew anything, but if you look back just 10 years, what's the evolution of financial crime insider trading activity and doing it from the outside, let alone the high-profile cases that we know about that come from within a investment management firm, and how people get material non-public information. So surprising? No. Made me very anxious because the best way to cripple our national security is to go after our economic security. So being able to sow doubt in the financial markets, being able to obviously profit expertly or clumsily, one way or the other, it's getting out now, it's becoming more public, and that creates anxiety and erodes trust. That's not good for our national security. It does beg the question, though, if I'm in industry, okay, what's a better way of conveying information to the regulatory body? And it's an opportunity to have a conversation between the regulated and the regulator. Okay, how are we going to exchange information in a more dependable way? How are we going to protect it better? And again, back to your question, Chris, surprising? No, because again, most of cyber hygiene is really achieved through, it's being religious about patching your systems, updating your software and the applications in the network, awareness and training and visibility, not just delegation of this to the back office, but acceptance at a leadership level that this stuff really matters. So that's a pretty common pattern, whether it's a public or private sector, when you hear about these hacks and where the vulnerabilities are exposed. It's through a lot of just negligence.
Is there a sense that, you brought up a couple of issues that are really important, particularly in the fintech space. When you think about fintech companies are small, sometimes they're emerging, sometimes they're focused on just different little points, and so what does cybersecurity mean for those firms? And I'll get to that, but one last questions was, do you see any particular countries being origins of cyber risk, and do you see state and non-state, particularly I guess the state actors being more involved in your work, and does this change the way in which you look at cybersecurity?
Totally does, and it depends on what the motivation of the actor is. Is it state secrets? Is it economic advantage? Is it political? And so depending upon what region or what specifically country you're from, let's think about how education works in these countries, and how are people educated in a formal sense or an informal sense. So what do I mean by that? If you very quickly think about, you go on vacation, you come back to your house and the door is locked, and you come in and you see in your living room everything looks normal. Maybe there's a book off kilter on the coffee table, but otherwise things look normal. You go up to your closet, you put your clothes away, you open your safe to put your passport back, and the only clue that someone was there. Guess who was there? Guess which country was there? It was that little book was slightly off kilter, but basically you didn't see any obvious evidence. It was the Chinese. If you come home, same scenario, maybe the lampshade's a little tilted, and you go to your safe, and the watch you got for your wedding, that's gone, but the safe is still locked. The Russians were there. You come home third time, there's graffiti on the walls, books are off kilter, the safe looks like it's been attempted to hack in. It's the Iranians were there. So I think you're seeing the state actor evolution, sophistication. In Russia, they have a wildly successful computer science and engineering education system. A lot of that has actually transported to Israel, and the smarts, associated with that education are there. I think if you are North Korea, you're doing anything you possibly can to up your game to get attention. And I think that is a political actor. If you're Nigerian, your uncle used to have a scheme where through fax, he was the prince, the struggling prince who needed to get a hold of his bank account. He just needed a loan to get him through, and he'll repay you at 50%, return. That's now a culture that is very good at phishing because they've grown up with it. So I think back to your point about geography, clearly the important state actors are going to be China and Russia and Iran. I would say of our allies, India's increasingly strong. I would say that Israel and the UK are tops. But if you're in Israel, you are from grammar school tracked and cultivated and brought into special units and educated. So I think one of the threats that we really think about is the K through 12 threat. And I would give credit to Admiral Mike Mullen, who's on our advisory board. He sees this as the #1 national security threat, is our education system. You ask yourself, are we really preparing our students to be technology-facing, tech-forward professionals in the 21st century? Are we also equipping them with a level of awareness and understanding about the risks? Are we teaching them about ethical behavior? Are we focusing on these issues and preparing them for the future? Because some percentage of them, as we know, will go off the rails. And if they have no hope for a future, then they will turn to do bad stuff. So I think we need to look from an education standpoint, and certainly we're in a legal setting here, undergrad and graduate. Let's focus on K through 12, and let's not overlook the youth.
Well, it seems to me, just as I listen to your comments, that you can have that the different risk obviously is tied to what kind of bad guy there is out there. You can have someone who just wants to blow something up. You can have somebody who wants to, I guess you can have a terrorist, a bank robber, and a hostile government as sort of 3 different categories. And the targets for each of those could be different depending on what kind of bad guy you are, and then also from where in the world you may be coming from. Do most of your clients know what questions to actually ask you when they walk into the door? Or do they just say, I just don't want to be hacked, I don't want to have my name in the Financial Times as being hacked, and I don't want to be subject to a bunch of folks coming through the door threatening to sue me? Or do they tend to be a little bit more sophisticated and say, look, my folks are just getting hit by these phishing schemes, or I'm really concerned, given the nature of our business, about X, Y, and Z. And the reason why I ask is when you talk about that K through 12, eventually those K through 12 grow up to be adults, and if what kind of awareness do people come to you with, or is it usually sort of after the fact, and there's been a hack and there's a problem and they need you to put out some fires?
So I will disclose that most times I'm with a client, they're having a bad hair day. I mean, they just, they've realized they've been victimized or hacked, and whether they've detected it from within or a law enforcement body or a regulator has come to them and pointed it out. And I think in the last 18 to 24 months, the awareness has just shot through the roof in terms of the issues. And so those of us in the cyber risk business, and I would count us as lawyers, compliance professionals, people in government, I mean, the news is free advertising. It is every day something new is creating that sort of anxiety drip that's just, what do we do here? So I think awareness is at an all-time high. I think that's a good thing. When you look at the construct, and I'll talk first private sector, that board members are aware of the potential risks. Why? Because the large institutional investors are now knocking on the doors and saying, where are you with your cyber protection? What are you doing about this hack that took place in your industry? They're putting more and more questions on the table, and boards have to really be thoughtful about that and react to it. And so the board community, frankly, has a long way to go to fill the cyber smarts gap that's in the boardroom. And so that's going to be, I think, a trend that will continue for some time. So to your point about education curve, we're going to need a new generation of people in boardrooms that heretofore would be viewed as not as experienced, not as prominent, what have you. But I think that's just like after Enron, WorldCom, Adelphi, and so forth, Sarbanes-Oxley drove boards to think about how do we get financial experts on our board, lead the audit committee, or at least be on the board to give that diverse perspective. I'll touch on diversity as well in a second. But so you have investors worried about it. I didn't even mention the plaintiff's bar. Have you thought about the plaintiff's bar coming after you if you're the victim of a data breach, you're a company? They've now recognized this is a whole new area. And in fact, one of our recent cases, we helped defend a corporation who had a large hack. And we went into the dark net. We sent our undercover operatives and our bots to go harvest information and look for where the members of the class had been victimized or breached prior to. So therefore, they would be disqualified from the class. We could say, hey, wait a second, you were hit in a LinkedIn breach 2 years before. Sorry. We also use the traditional investigative method. You're a regular plaintiff. You're a serial plaintiff. Your credibility is, down here now. So I think the plaintiff's bar is going to demand that more people are more vigilant, more responsible, and more proactive. Okay, so let's get to management. What's management doing about all this stuff? They're getting their heads banged in by the board. Every time an article comes out, they get an email from a board member or an investor saying, what are we doing about this? Are we on this? And it's tough. I mean, I feel sympathetic to management. And what are they doing? There's a lot of companies that are still delegating it to the IT department. And by the way, that IT department is run by a CIO, and they still have, if they have a CISO, a Chief Information Security Officer, she or he is reporting up to the CIO. Not a good practice. You want separation, you want a better governance structure so that information security person has the ability to go and have independent conversations. In my company, that person reports to my COO and Chief Legal Officer. The CIO reports to my CFO. So I think there's a lot of changes that have to take place internally within companies to just catch up. And how easy is it to recruit a CISO and retain her? Not easy, very difficult. And there's so many complexities within the private sector that you're grappling with on this topic.
One of the complexities has to be the ever-evolving nature of cyber risk. And we had a brief conversation, and I think it would be really interesting to talk about Bitcoin and the evolving nature of cyber threats when you have cyber extortion and the payment used for extortion. And maybe you could give and provide some flavor as to some of the new fronts and new risks that you're seeing playing themselves out.
Sure. In our old business, we were in K&R insurance. Do you know what K&R means? Kidnap and ransom. So we would work for the insurance company who would assign or sell policies to executives and their families when they would travel or live abroad. So our job would be to go in when that executive or their family was kidnapped, and we would negotiate with the kidnappers for the release of the insured, which means we would have to negotiate, but basically there was always going to be a payment, and we retrieved 180 human beings, no deaths. So that was, in the 90s and the thousands, and we maybe had 10 a year. Now we have digital K&R. So what we're doing, 10 a week, is for clients who have been somehow breached, and their data, if you know what ransomware is, do people are aware of? Okay, so ransomware is when you effectively lock information or lock people out of their systems or shut down operations within a company, or as we've heard about, law firms. And so we've just recently conducted a hostage negotiation on behalf of a law firm that paid $1 million in Bitcoin to the bad guys. And let me tell you, they didn't deliberate for more than an hour on this one. They said, we're going to pay it. That's what they asked for, because the exposure, the potential downside, and the risk was just, by an order of magnitude much, much, much greater. And the saddest thing about this stuff is so much of it is preventable. And so if you read about the WannaCry, Petya, these were kind of old antibodies that were running around, and they got free because people weren't updating or patching their systems. And you heard about businesses, professional services businesses, industrial companies, they were knocked out for hours, or in some cases a week and a half. So what we look for in our staff are people who know how to deal with hostage negotiations, conduct investigations on a forensically sound manner, go into the dark web and know who's a legitimate crook and who's not. Because sometimes, maybe the best course of action is not to pay the ransom. So I think hopefully that gets at your question.
And generates even more. Was there a reason why they were asking for Bitcoin as opposed to some other currency, or are you not allowed to? Oh, okay.
I mean, it's a dream come true. Right. So in the old days, we used to have a duffel bag full of cash of, unmarked bills. Right. So that was then, and now it's a dream come true to have virtual cryptocurrency that is there to effectuate a successful transaction between two parties that want to remain anonymous. And so that is and in our research and our undercover work in the dark net, this is the currency of choice for bad actors who are looking to purchase or trade account information, frequent flyer miles, you name it. And so the virtual currency business is flourishing in
more ways than one.
In more ways than one.
Right. Well, given the fact that cybersecurity is important, and given the fact that you had mentioned that one of the possible routes of infiltrating an even mature cyber company, or a company with a mature cybersecurity system, would be through a third-party venture. Lots of times, particularly in finance, earlier, we had our peer-to-peer panel in which we talked about the collaborative nature between some of the fintech firms operating in tandem through joint ventures with other larger, more established banks and the like. You see not just a disintermediation, but you're breaking down financial transactions into little points. Mm-hmm. And when you think about it, when I think about it, at least from your standpoint, each of those little points can be a different business, right? It can be a different company providing or working with another company. And each one of those companies could and should be secure, because if you infiltrate one, then you end up infiltrating the other systems in any particular transaction. But when you have these smaller firms, the upstart firms, from your experience, how costly is that cybersecurity relative to their business, relative either through their earnings or revenue or
reputation,
funding or reputation? Exactly. And have you seen a challenge getting those smaller companies up to speed?
Yeah, I think on the spectrum, we do operate. We don't just serve money center banks. We serve brand new companies in the financial technology and regulatory, RegTech, Fintech, InsurTech. My wife is an entrepreneur as well, so Femtech, if you've heard of that expression. Very cool. She was just published in the Washington Post a couple weeks ago. I'm very proud of her. Apre is her company. It helps women who want to pivot in their career or return to work and connect them to employers who want to increase their brilliance and competitiveness. And so, Femtech, but look up Apre. She's going to kill me for that, but anyway.
No, that's totally interesting. Yeah.
A lot of recovering lawyers on that site, looking to come back and kick butt in the workplace. So I'll put one of our clients on one end of the spectrum, and then I'll anonymize another one. But to kind of get to the point, it's game over if you're a young company and your systems are viewed, or your data is viewed, or how you transact business is viewed as fragile or not dependable. Yet, in the real world, every incremental dollar that you make via revenue or you raise via investors goes towards engineers, business development people, marketing. That's where the money's going, unfortunately, for most. And it's not going to upping the regulatory risk management framework. It's not going to upping the cybersecurity framework. And it's not going to sort of recruiting people who specialize in these areas. And that, I think, is a big problem. It's a people problem, people. And so I think the young companies, what are they good at? They're good at innovating or just sort of creating a new way of transacting, payments, lending, figuring out how to trade virtual currency in a lucrative way, in a responsible way. And they focus on customer experience, user experience. That's their strength. What we would like to see is a lot quicker coexistence and deepening partnerships with traditional financial institutions who have got a lot of the scar tissue, who are good at management processes and disciplines, and that there needs to be more coexistence. Unfortunately, we see a number of these young companies, and I could blame the CEO. That's the person that's responsible for not making these investments. I could blame the board, but at the end of the day, the board is saying, we've given you our money, now we buy into the vision, make it happen. Every quarter, that board has to be asking, where are we on security? Where are we on our regulatory framework? I'll give you a specific example that I think is worth noting. Has anyone heard of Gemini? Securities. Two, interesting.
No, the one, two, three,
okay.
4.
So can you explain what it is? Winklevoss, yes, but yeah.
Yep.
But it was our understanding it had to do with a Bitcoin exchange. I don't know if they have changed that.
So it's Bitcoin and now Ether. And so they called us when they heard from a large money center bank, and this was about 4 years ago. We would feel comfortable trading with you if you had an AML program in place. AML, KYC, people know those
Yep.
acronyms, right? I mean, in the traditional financial institution world, extremely well known, and there's a lot of people applied to them and technology and so forth. But the bank's like, that's great, guys, but I can't do business with you unless you have this in place. And thankfully they recommended us. And then they also said, these guys and girls will come with you to DFS. So if you build it right, you then go to DFS, you have your third-party consultants who have set up a KYC program, who have put in compliance systems, who have done the training. You need to give those regulators assurance. And if they buy in, then we will buy in. So it's this virtuous circle. And I have to say that Tyler and Cameron invested a lot of money in security and compliance, much, 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 much more. And by the way, the traditional financial institutions have a lot to learn from them because of how they've dealt with really thorny security challenges. In a world where you're trading virtual currency, the whole idea is you celebrate anonymity and you're operating at such a feverish pace. And it does eventually come back to this need for deep coexistence between the new companies and the traditional.
That I think from a, and we're just talking about crowdfunding in the previous panel, but it gets also to this question, which is, what kind of appropriate response or regulatory approach do you take for early stage companies, or do you instead, from a regulatory perspective, you tell the more established companies, hey, look, we're expecting you to help out some of the smaller companies that you're partnering with, and do you create a glide path, or do you have to have different kinds of expectations for smaller companies versus larger ones?
Yes, absolutely, and I think the regulatory community has done a remarkable job of the following things. Information sharing. They have been pushing it for years and years. And you know what? It freaking works. As long as people have a level of trust and they can share. There are patterns to divine out of this information that help firms stay in business. They also have do's and don'ts on their websites that address really the kind of fundamental cyber hygiene needs of firms. So they're doing their job in terms of putting out information sharing requirements, putting out do's and don'ts, best practices, and they are working. If you pay attention to law enforcement and sit with law enforcement, you're going to learn where the threat is coming from a year or 2 years from now. It's happening right now. The early days of it are happening right now, and so that the fostering of dialogue that you're doing here and that need to take place formally and informally between the regulated and the regulators is so crucial. And I'll give you an example. Recently, we created a company led by Jim Rosenthal, former chief operating officer of Morgan Stanley, former chairman of SIFMA, and he and Phil Venables from Goldman Sachs said, we're worried about systemic failure of the financial services industry. The top 10 banks have got security pretty well in hand, but what about the 8,990 other, regional banks, community banks, securities firms? So they created something called Sheltered Harbor, which is in effect a place to help structure an environment where if a bank fails because of a cyber attack, the resiliency is there, the customer data is there, the porting of it, and it's the preparedness at such a high level industry-wide. Why are they doing that? Because you go back to your question about where's the weakest link in the chain. If I want to get either as a nation state or as just a crook, I want to go to the mid and smaller size, the less resourced. So I think if we can see this happen in Europe and in Asia, that's going to be really critical next steps.
So you sort of talked about this before, but you're obviously also a CEO. And as a CEO, you have certain kinds of expectations that you're going to want within your company. Even from K2's perspective, you want to make sure that your company is secure from all kinds of folks who would like, in particular, to have the information that you have.
Don't get any ideas out there.
So how do you go about thinking through, from a CEO's perspective, security in your firm? And obviously K2 is a particularly interesting and sensitive case study, but how generalizable are those best practices across industry?
Well, I'm also an owner of the company, so I think if the average CEO owned enough of a company, they would think they wake up in the middle of the night, not just thinking about a product launch or entering a new market, but they would think about the fragility of the asset. So we do devote an extraordinary amount of our IT budget to security. We have a team that specializes internally in both the technical sides of security, but also behavioral. So I can't stress enough the importance of awareness and training. And you make certain training modules mandatory. And then you also add as incentives, other training modules. For example, some of our most popular, not required training modules have to do with home security, personal device and home security. Because people respond to that. They think, okay, how does this affect me? How does this affect my significant other, my family? And so I think a big part of what we've tried to do is put in place simulations of being hacked. We run hacking attempts on our own people, and we see what the results are. We educate them more if there are people who have failed those tests, so that ultimately they don't make a bad decision. Are we going to minimize it to zero? No. But I think awareness and training, and by the way, I don't think that ultimately smacking them in the face or firing them is the right way to go. We have to come up with incentives. Incentives drive behavior, and rewarding people for making the right decisions is really important. And I would say, again, if CEOs think of this as an owner, realize the fragility, and if you ask your CEO, like, so how are you dealing with security? And he says, well, I got this really great, I didn't even mention the fact that we have a chief information security officer or a head of training or a CIO. They're not responsible at the end of the day. So to say, I've got, the team tells me it's taken care of and we're in good shape, the days of that CEO are numbered. So it's really getting in the weeds. It's really understanding what the risks are real time. We have a whole external facing security team, so it's knowledge sharing, it's investing in education for our technology folks, but it's also specialized training for your finance department, for your HR department, for your legal department, because I'm not going to try to hack the CISO. I'm going to try to hack the general counsel because he has got some really juicy information and is probably very susceptible, to clicking the wrong link or opening the attachment, not necessarily thinking. I'm not sorry to pick on lawyers, but non-technical people who may not be aware of the threats. So I don't know if that fully answers the question.
So when it comes to crisis response, when the person does inevitably sort of or mistakenly clicks and you've now been compromised, what do you see as particularly poor crisis responses that you've seen market participants make? And then what do you think is the better response once your security or your cybersecurity has been compromised?
So, number one is they're swimming in that river in Egypt. Denial. It's like,
yeah.
I remember I met with 25 different GCs of hedge funds during the course of the insider trading spree going on. And I said, look, we have Palantir, we have our social media investigators, we have behavioral analytics. We have the perfect killer app for you to identify the next rogue trader in your operation. So they'd say, it's really interesting. There was one person who was honest with me, and she said, wait a second, you're giving me all this information, now I got to do something about it. Wow. So there is a mentality out there that I think over time, and I hope will change, and I do feel like if you deny or deflect or you stick your head in the sand, those are leading indicators of you're screwed. But this is where I think private sector, public sector need to come together and create a safe space to sandbox, to allow for security prevention, to allow for data analytics exercise, to allow for pattern recognition, and to basically create an environment where people are trusting each other that they're not going to get, again, punished for sharing, for self-reporting, or saying, I don't know how to monitor 1 million transactions a week and look for, things that would constitute a SAR when you have this integration of cyber attacks and traditional money laundering techniques. I don't know what to do here. I need help. So there needs to be a safe place for people to game these things out, work together. And so, I think I can't stop, pitching education. And I think the awareness, if it's delegated down to mid and junior level people, you actually see the greatest number of offenders are the senior people. They're unaware of what links they're clicking and what attachments they're opening up, and they don't know the damage that they're doing, and yet they're the ones who don't show up for the freaking training sessions because they think the rules don't apply to them. So I think tone from the top, really critical. Integration of newest and greatest technologies and experimenting with new methodologies, teaming with the public sector are all important things to be doing right.
No, and that is certainly something that I know a lot of people in the room are looking about and thinking about. Our next session will be on regulatory sandboxes and what kind of experimentation you can have with the public and private sector. But looking forward, there are also some folks who are in investment. You are an investor for sure. Where do you see some of the more interesting investment opportunities in cybersecurity, but also fintech more generally? Are there things that excite you more than others? Are there things that you tend to view a little more skeptically? What's your vision like when you think about the world of potential investments?
I mean, we're at such an exciting juncture overall because people are they've got enough education to know what the risks and the issues are. There's enough capital looking for great teams and technological solutions to solve for. You have large old economy players who are innovating from within and putting serious money to work. And look, there is a high cost to be a licensed insurance company or to be a regulated business in the financial sector. And so there's a felt need to, we can do a better job here. So I think one of the exciting things that I see is emerging is, and this sounds a little geeky, but entity resolution. So if you're going to have an effective AML program or an anti-financial crime program, and you're being told you've got to now take all this structured and unstructured data, bring it into a view, and figure out, is this Chris Brummer or is this Chris Brummer? And without harming your business. You've got to figure that out on such a rapid basis, and that's entity resolution. And so I think there's data analytic tools that are emerging. I think there are opportunities for homespun technologies built out of large financial institutions, for example, that are going to come to the fore. And so that's one area. Workflow and compliance. Again, sounds pretty thrilling, right? It's not as cool as Snapchat, but if you can improve workflow and compliance, apply machine learning, improve the integrity of the data, understand the true legacy of the data, and create a much better environment for compliance and legal professionals to work within, then you're harnessing their training, you're harnessing their judgment. You're actually getting to a better answer. Do I de-risk and get rid of this customer, or do I keep them? And so I think these are a couple areas that are interesting. Look, in cybersecurity, every 4 minutes there's a new cyber company in Israel. We have an office in Israel, and they're trained from the cradle to be in security. And so whether it's in Israel or in Scandinavia or here in the States, in the last 6 years, something like 1,300 cyber companies have been funded, for the most part by, and I would say 95% of them have been funded by people who, I need a security company, I'm going to tick the box. So specialized investing in security, but doing it not just as a pure sort of financial investor, but partnering with industry, I think, is also an exciting area, because industry is where the problems are. They exist. The felt need is. And so if you have a place to do R&D and you have a place to figure out what's the next IoT hack on a home smart a smart home thermostat system, you're going to want to understand how to deal with that, but you need access to innovation, technology, and teams. So I think that will be an advancement in the investment space, which means companies and investors and principals of both work together on this issue.
Interesting. We had a really interesting phone call earlier, and I just wanted to have you share this thought to this particular crowd because I think it's fascinating. But we had talked a little bit about automation, the challenges of automation. There are certain kinds of questions about source code as an intellectual property and questions about source code. But also, how do you make sure that when you think about automation, when you think about algorithms, getting back to your original phishing observation, a lot of times, even when it comes to the reg tech, you have to figure out whether or not there's enough machine learning to comply with new rules on the reg tech world, and to the extent to which people are executing transactions, you have to know, well, what are those algorithms programmed to do? And you had mentioned the idea of, well, one day there may be some kind of development of compliance source code where you could sort of track regulatory environments of algorithms. I mean, I know it's just a futuristic idea, but I think it's pretty cool. And that's why I wanted you to maybe share what you meant by that concept.
I have no idea what I meant. No, I came up with that on the spot because it was in response to your point that the regulatory community really wants to try to get at the source code of trading algorithms, so that they can do a better job. That ain't going to happen. I mean, if I'm a investment fund, this is my crown jewel, my intellectual property, and frankly, working investigations like we do, we just did one recently a few months ago that was public, where an internal technology person at a very large hedge fund, we figured out that he was using steganography to hide trading code in images that he was then emailing to himself. It was just Susquehanna. It was in the news. And so these firms, they're also worried, like, well, what happens if I give you my source code and then you get hacked? So I just feel like it's a Gordian knot you can't untie. But why are they looking for the source code? And if you're the regulated body, what do you gain from interacting? And it's really around trust. So the notion that there can be a set of risk controls and rules built into machines to help establish transparency in how compliance is being rolled out and followed, whether it's transaction monitoring or it's KYC onboarding or whatever it might be, that maybe that's a way of establishing, kind of getting to the ultimate objective, which is how can we trust each other? A, that I'm doing what you tell me I need to do. B, you are doing what I'm telling you to do. And knowing that this source code is going to change over time, but transparency within that exchange is I think going to help establish greater trust. And I know you have a panel later in the next couple of days around this convergence of cybersecurity and money laundering. And so there needs to be constant evolution, and the machines need to constantly be tuned and updated. And you go back to entity resolution and the quality of the data. Because if your data lacks integrity, you are going to get crushed by the regulatory community. You have no excuse. Now, you could sensitize them to your challenges. You just acquired a business. You've got a lot of legacy issues through that acquisition. You need time to clean things up. Or you're a young company, a Fintech company, and that regulator needs to be sensitized to, look, there's only so much time and money you can apply to risk controls, regulatory risk management, and security. So can you just think, Mrs. or Mr. Regulator, about how we could have a little bit more of a sensitive version of what you want to achieve, but again, put yourself in my shoes and affecting dialogue. So,
I think that's just fascinating. Cybersecurity can be a little bit intimidating, particularly for regulators, frankly, and policymakers. And at the Institute, we've tried to engage not just regulators and not just the market, but increasingly we'll have discussions with people on the Hill who are also trying to get their arms around these kinds of issues. How, right now in DC, there is an enormous push to educate not just K through 12, but the people who are already making those decisions in-house within the regulatory bodies. And I think one of the, I guess my last sort of question for you as someone who thinks about training, is the training process different when you get to a regulatory, I mean, you haven't been a regulator, but when you look and when you talk to different folks, I'm sure you see a varying level of sophistication as it pertains to cybersecurity. But yet, you do need partners, again, in the regulatory community as well as in the legislative community who have a requisite amounts so that you could figure out some kind of thoughtful policy solution. How what are the impediments to getting that training up to speed? Given your own leadership as a CEO, you have to train your people. Any thoughts for a lot of leaders here who are thinking about getting their own folks up to speed? How do you make that happen as quickly as possible? And how do you get that? How do you improve that human capital, particularly where, frankly, it's not going to be as easy to just acquire new people? It means also sort of retooling and retraining some of the people who are already in your agency.
Well, I just asked the group here, has anyone gone through what you felt was an effective cybersecurity training exercise?
Raise your hand if you have. Okay, that is a growth industry right there.
So did I mention that that's an area of focus for us from an investment standpoint? And I think the Law Center, among other institutions, be they law firm, law schools, business schools. Something interesting is going on Roosevelt Island in Manhattan, where Cornell and Technion created an applied sciences graduate school. Applied is the operative word. And so I think one key dimension is the existing educational framework, the amount of sophistication already resident here at Georgetown, for example. Because, across town where I went on the Hilltop, you have the greatest thinkers around national and economic security. You also have people who study languages and linguistics and fine arts, like myself. But you have human beings who have a lot to contribute combined with the legal acumen here. And this is a safe space. So I think there's repurposing existing educational framework, and that's key. I think that, look, at the end of the day, our view is that if you're going to be properly educated, it's through a sustained effort that you feel you're incentivized to continue that training. So whether it's through entertainment, there's a company I'm looking at right now where they provide cybersecurity training, and the lead, not the CEO, but the lead person on the content side is the former head writer of The West Wing. Pretty cool, right? Yeah. So they create videos that are topical and interesting and entertaining. Getting emails in your inbox with some static newsletter, not super helpful. So I think you want interactivity. I think you want engagement. I think you want entertainment. It certainly helps to focus on the human being, herself or himself. How do I protect myself? When Equifax or other breaches of that matter happen, there's a hell of a lot of anxiety. So I think the regulation community, the bodies themselves, there has to be at the leadership level a recognition, like, we have human beings in our organization. We need to think of them as human beings and their families, and we need to help protect them and arm them, on a personal basis. So I think incentives are so key in getting this better. And I do think if there's ways for industry and public and private sector to work together in forums where they get a chance to just get out of their shoes and step into somebody else's shoes, and vice versa, they're sensitized to what the challenges are. And again, fostering more trust.
Well, I will end there, although I will note that the theme ultimately for all the technology and cybersecurity and cyber hacking and cyber extortion that we talked about, it's actually an enlightenment theme, right? Rousseau said, to enlighten or actually to entertain and instruct was one of sort of Rousseau's great ideas in terms of how do you be a great educator. And I guess the more things change, the more they ultimately stay the same. But thank you, Jeremy. This was fantastic. Told you you'd be great. And we'll have a break and then return to our regulatory sandbox and Craig Phillips in the afternoon. But thank you so very much.